For many decades, the US dollar has not only been a symbol of America's economic strength, but has also enjoyed unparalleled global dominance. Its role as the world's primary reserve currency has ensured its presence in trade, finance, and investments. Recently, however, the narrative has begun to shift with the rise of BRICS nations and their increasing economic clout. Questions are emerging about the potential of these countries to challenge dollar's global economic clout. The whispers are growing louder and the financial world is abuzz with this discussion. Are we really on the cusp of witnessing a new financial world order? BRICS, a term that has been echoing in international corridors, stands for Brazil, Russia, India, China, and South Africa. This association, which began as BRIC before South Africa was also included in 2010, is an association of emerging global economies. And on August 4, 2023, BRICS announced that beginning 2024, they are going to induct 6 new members into BRICS: Saudi Arabia, Iran, Ethiopia, Egypt, Argentina, and the UAE.
Leaders of the BRICS alliance of 5 nations have invited another 6 countries to join. They are Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates.
BRICS nations together have some impressive stats. 29% of the world GDP, with India and China alone accounting for 23%. 46% of the world population, with India and China in there, it's no surprise. 43% of the world oil production, with Saudi Arabia and Russia accounting for 25%. 25% of global exports, with China alone accounting for 15%. So their collective might and strategic collaboration makes them a force to reckon with in the international arena. The recent past has witnessed BRIC nations talking about their desire to recalibrate their economic strategies. One such declaration that has taken the financial world by storm is their intention to reduce the dependence on US dollars for mutual trade. Such a move, if realized successfully, can have profound implications. While the intent is clear, the path is riddled with complexities, both economic and political. The global community is watching with bated breath as the BRICS nations navigate these tough and complex waters. Let's look at what would happen if BRICS is totally successful in implementing the bloc's plan. The best case scenario for BRICS, or here we discuss the 5 major outcomes that are quite frankly worrisome for US dollar. First is decreased global trust. For decades, the US dollar has been the cornerstone of international trade and finance, symbolizing trust and stability. However, a significant move away from the dollar by these major economies could really erode that trust. As countries start pivoting to alternate currencies, it could raise some serious concerns and questions about dollar's viability, long-term viability, as the major reserve currency. A diminished trust could have a cascading effect, leading to a reduced demand for dollar, impacting trade, investments, and international financial arrangements. Next is economic volatility. See, the reserve currency plays a pivotal role in the stability of global financial markets. A significant shift away from the dollar could usher in a period of economic turbulence, at least in the short term. The US financial markets in particular are very accustomed to the strength of US dollar, and they may witness some major uncertainty. Stock markets could become jittery, bond yields could fluctuate, and the investment landscape could undergo major transformation. This volatility could impact foreign investments and frankly impact the overall economic stability and growth of the nation. See, the demand and supply dynamics of a currency can significantly influence its value. If the global demand for dollar reduces, it could result in oversupply in the domestic market. Such a scenario would dramatically reduce the purchasing power of an American consumer, thereby bringing in inflationary pressure. Everyday commodities could become expensive, the savings might erode, and general standard of living in America could diminish. Next is higher borrowing cost for US. The US, more than any other nation, relies on borrowing to finance various projects and programs. Historically, the strong position of dollar has ensured very low rate of interest that the US government has to pay to its creditors. However, if trust in dollar wanes, the creditors might demand higher interest to compensate for the perceived higher risk. What does this mean? Higher borrowing cost, putting strain on the national budget. In the long run, the higher borrowing cost could mean lesser availability of funds for essential projects and programs, thereby impacting the development of the country. Next, let's talk about the shift in global politics. The dollar, beyond its economic position, has been an incredible tool in the hands of US government. Many international transactions, including for energy and other financial transactions, are denominated in dollars, thereby giving the US government an oversized sway in all global business. However, a reduced reliance on dollar by these major economies could herald a scenario whereby the US global power reduces. This shift could lead to a realignment of global alliances, potentially placing the US in a less dominant position globally. So does this mean it's all over for dollar? Should we all start looking to move to BRICS countries or start opening accounts in their banks? Not so fast. Jim O'Neill is the former Goldman Sachs economist who coined this term BRICS, and he has called the idea of a common BRICS currency ridiculous. So again, let's discuss why the idea of threat to US dollar from BRICS currency looks less real and frankly mere aspirational. The US dollar's global prominence is just not traditional. It's backed by a complex web of financial systems. As the primary reserve currency, it supports global trade, investments, and debt. The existing financial infrastructure, which has been built around dollar over the years, would be very difficult to undo. US dollar is the choice for more than 70% of world currency users. Euro is next at 23%. China, which is the largest economy by far in the BRICS countries, has its users of its renminbi at just 3%. So BRICS have a long way to go. The US holds a dominant economic position with its vast markets and influential financial sectors. Its large economic size means that any alternative currency has to face dollars trade volumes and transactions that frankly no single currency can face. Despite global challenges, institutions like the US Federal Reserve maintain a reputation for stability. This consistent trustworthiness means the dollar remains the preferred choice for international transactions. Ever heard of TINA? There is no alternative. No currency currently matches the dollar's infrastructure, acceptance, and trust. Past contenders like the euro and the yuan have been around, but they have their own set of challenges, making any switch not only a matter of economics, but also global sentiments and politics. This actually is the elephant in the room. The diverse nature of BRICS nation with different political structures and economic priorities makes unified action on a shared currency a very complex endeavor. Their internal variations and external trade dynamics add layers of complications. And India and China, the two main nations in the bloc, are always at loggerheads.
Is the relationship between India and China at its worst point in 25 years?
So here is the deal. Until India and China start working together so well that the world believes that it's sustainable, the BRIC currency has no future. So in conclusion, while the nations of BRICS are very clear in their intention to reduce dependence on US dollar, the path to achieving it is filled with complexities. The US dollar's long history, combined with the political, economic, and structural might of the US, ensures that the US dollar is very safe in any foreseeable future. America and rest of the world should take note of BRICS and engage with the bloc on important economic and political matters. But there does not seem to be any immediate threat to the mighty US dollars. If you like this video, I'm sure you'll like this other video about what would happen if China were to call all the US debt that it owns. And please make sure to like and subscribe this video. Bye.